But in terms of your portfolio mix, I imagine you're not saying everybody out of the pool when it comes to the U.S. equity market.
No, I wouldn't say that. I would say be cautious because U.S. stocks are very expensive. I like to use the Shiller PE ratio. It's price relative to 10-year smoothed earnings, takes out the effects of the economic cycle. And that Shiller PE ratio is around 35, 36 times the 10-year average earnings. That's expensive. That is very expensive. You could go halfway back to historic norms over the next 10 years. And you'd still be expensive, and that would cost you 3% a year in repricing of the stock market.
Would you buy Europe right now?
Yeah, I would. Europe is cheap. I like to think about things from the vantage point of, will any of today's news still matter in 5 years? COVID? Nah. Fed policy today? No. Ukrainian independence? It pains me to say this, but no. Russian adventurism? Maybe, because the country is boxing itself in to be a pariah state as long as Putin's at the helm. Reckless spending? Absolutely. It diverts resources from the private sector that brutally punishes inefficient use of capital, and government spending doesn't.